Hello friends, how are you? I hope you all are doing great. So finally we are starting with resuming with I can say with our English batch. Sir, yes, finally you are back. Yes, we are back. I have been getting lot of requests, literally in thousands I have been getting requests that sir please resume the English batch, but sometimes in the life the circumstances are not in favor of you. Whenever I used to plan that yes today I'll resume with the batch, something or the other thing will happen that will not allow me to record and upload the lectures for you. Now I'm trying to be back, right, recording the lectures for you. But one thing is for sure that your attempt now, July 2021 students, this batch won't be complete for you people, right? For November 2021, yes, your batch will be 101% complete on YouTube. Don't worry about it, right? Even if you have got the books and everything, don't worry about it, right? For July 2021 students who want to complete costing from us, they can go for the fast track batch. Fast track batch is available in English. In that batch also, you will get 100% concept clarity, right? That is my guarantee to you people. That is also completely in English, available on our mobile app also and on the website also if you want to play it on the laptop, right? So for November 2021 and onward attempts people, right? Why I'm saying onward attempt? Because try to understand one thing, that this costing is a static subject, right? So the concepts are going to remain same over the years. Down the line, 5, 6, 10 years, the concepts of the costing are not going to change. The only thing that can change is the number of questions can be added or something like that, right? And one more thing, I've been getting lot of requests for the study material course in English. It is available in Hindi right now on the mobile app, right? So a lot of people are saying that sir please provide it in English also. We are working on that also, right? We have started with the recordings. We'll make it available very soon. So stay in touch. For that you can join the Telegram group and the channel. That is, link is available in the video description. There we keep updating you people, right? Or the other option is that you can subscribe to the channel and press the bell icon. That is another option that you can use, right? Okay sir, so what we have been doing is, in the last lecture where we left was the absorption of overheads, right? So we were discussing about absorption of overheads. That what is absorption? Absorption is the process of recovery of overheads from the finished output of a particular production. That means that we have to now identify all the overheads in one unit of finished good, right? So let's try to understand this absorption now. Let's in continuity only we'll be doing, so don't worry about it, right? One second guys. Okay, so let's try to understand about the absorption of overheads. Absorption of overheads. So just a small revision what we have done, right? Say this is the factory area divided into 4 parts: P1, P2, S1 and S2. P1 and P2 are the production departments and S1 and S2 are the service departments. Here you have overheads of say 10,000 rupees. Now what we learned? We learned that we will be distributing these overheads into the 4 departments first, right? This is the first step that we called as primary distribution, right? This is known as primary distribution. Any doubt? What is the second step? The second step is the distribution of S1 and S2 expenses between the production departments, and this we called as secondary distribution. Any doubts in this? This we call it as secondary distribution, right? Now what happened? All the expenses, that is all the overheads, are now accumulated in this part, right? All the overheads are lying here, and here is our 1 unit of finished good. Now what is the next step? The next step is the absorption of overheads. Now absorption of overhead says what you have to do. Absorption of overhead says, sir, simply what you have to do is you have to take this overheads from P1 and P2 to 1 unit of finished good, right? This is called absorption of overheads. Now this is called as absorption of overheads, right? This is called as absorption of overheads. Any doubts? Right? Now try to understand. Now for this absorption, that is to carry the overheads from production department P1 or P2 into 1 unit of finished good, to carry the cost from production department to the 1 unit of finished good, we need some carrier, right? We need some carrier to carry the cost from production department to 1 unit of finished good. What this carrier is going to be? This carrier is going to be some direct carrier, some direct cost, or I can say some direct parameter that will carry the cost. Why direct parameter, sir? Because direct cost is the one cost which is identifiable in 1 unit of finished good. So if you have to make an overhead expense, if you have to make an overhead cost identifiable in 1 unit of finished good, what you have to do is you have to use a direct cost to identify it, right? So based on this only, what we have is these methods of overhead absorption. Based on this, we have the methods: rate per unit of output, percentage of direct material cost, percentage of direct labor cost, percentage of prime cost. What is prime cost? I'll tell you, don't worry, right? Direct labor hour method, machine hour rate method. So all these are the direct carriers that help in carrying the overheads from production department to 1 unit of finished good, right? So all these methods are what we are going to discuss. We'll start with one by one, right? We'll discuss in detail all the methods. We'll discuss in detail whether these are the simple methods or whether it is a complex method, right? The complex method is only the last one, that is the machine hour rate method. Rest all the methods are very, very simple, so you don't have to worry about it. But we'll be discussing that when this method is used, what is the suitability. We'll discuss the examples also. We are going to discuss each and everything, so nothing to worry about it, right? So let's start with the methods of overhead absorption. We'll go slow, we'll not go very fast. We are not in a hurry, guys, right? Okay, so we are starting with methods of overhead absorption. Right, sir. What is the first method? Let's start with the first method. First method is percentage of direct material cost. Percentage of direct material cost. Right. Now, one thing, when we discussed in the last lecture about the overhead absorption, I told you that this absorption is on the budgeted basis, isn't it? Why it is on the budgeted basis? I told you because overhead expense is a major expense for any factory and you have to plan in advance. You have to keep some money aside in advance, right? How you can decide it? On the basis of the budgeted figures of the last year. Isn't it? I gave you that example of electricity bill, I think. Let's see. Yes. Overheads is a major cost for any business. The planning for overheads on the basis of past experiences, that is very, very important, is done on the basis of budgeted data. So whenever we are doing the methods of absorption, say the percentage of direct material cost, how to calculate the overhead rate in this case? How to calculate the overhead rate in this case? It will be budgeted overheads. That means the overheads of the previous period divided by the budgeted direct material cost multiplied by 100, because we have to calculate the percentage. Now what is the meaning of this? What is the meaning of this method? This method says that on the basis, say last year, I'll take an example. Okay, I'll take an example to explain this. Let's take an example for this. Say last year last year my budgeted overheads were rupees 50,000. Right? My budgeted overheads were rupees 50,000 and my budgeted direct material cost is rupees 1 lakh. Right? Now the overhead rate, that means this method says what is the percentage overheads, what is the percentage of overheads in comparison to the direct material cost. What percentage of overheads, right, in comparison to direct material cost. Now, on the basis of last year, you have to calculate the overhead rate. That means the budgeted overheads 50,000 divided by 1 lakh multiplied by 100, that is 50%. Now this percentage, what does this percentage signify? This percentage says last year whatever the direct material cost is, my overheads were 50% of the direct material cost. Right? This percentage says that whatever is my direct material cost, my overheads will be 50% of that cost. Right? How I got to know the 50%? Based on the actual figures of the last year. Right? For last year, these are the actual figures. Right? Now, in the current year, now coming to the current year. In the current year, I say my direct material cost is say rupees 20,000. Now, just tell me what will be the amount of my overheads. What I am saying is, I'm saying amount of overheads you have to tell in the current year based on the data of the previous year. From the previous year, we calculated that the overheads are 50% of my direct material cost. So, from this overhead rate, I can calculate my overheads will be 50% of direct material cost. And I know the direct material cost. Yes, sir. I know the direct material cost of current year. How much? 20,000. That means my overheads in the current year will be 10,000. This is what I will be absorbing in 1 unit of finished good. Right? Say in making 1 unit, I'll say in making 1 unit of t-shirt, right, of FG, my direct material cost is say 100 rupees, right? This is identifiable because it is a direct cost. Now you might ask me that, sir, how can you know that direct material cost is 100 rupees? Because it is a direct cost. And I told you that any direct cost is the one which is identifiable in 1 unit of finished good. So this 100 rupees is already identifiable, right? From this rate, I can say my overheads in that 1 unit will be 50 rupees. That is 50% of 100. That is why I told you that for the absorption of overheads, we will need what? We will need a direct carrier. Clear? So this is how we can identify the cost in 1 unit of finished good. Direct material cost, it is known to us. In 1 unit of finished good, we know how much of direct material cost has been incurred and what will be the amount of overheads that will be absorbed in the 1 unit of finished good. It will be dependent upon this overhead rate. Clear? Any doubts in this point? Right? So budgeted data of the last year, we will get the absorption rate from that what is the percentage or what is the absorption rate on which we have to absorb in the current year. This 50% based on the last year, and using this 50% we calculated the overheads in the current year, right? Now comes another point about the suitability of this data. Now, where this method is suitable, this percentage of direct material cost method, in which of the areas this method is going to be suitable, where direct material cost is one of the major cost, right? Where direct material cost is one of the major cost, there you can apply this percentage of direct material cost, right sir? Second, prices of direct material do not fluctuate much, right? That whatever the direct material you are using, the prices do not fluctuate much. Why sir? Because if the prices are fluctuating too often, the overhead absorption rate will be wrong, right? Then it will lead to the wrong absorption of overheads, because you absorbed according to one rate and the other day the rate changes, then what will happen, right? We'll study about under and over absorption also after this, but the prices should not be fluctuating much of the direct material. Only then you can apply this. The other method is output is uniform. Output is uniform. That is, only one type of product is being produced. Only one type of product is being produced, right? So if you are making, say, multiple products, on one side you are making a shirt, on another side you are making a pen, on the third side you are making another product, the overheads in a single factory you are making all these things, right? In a single factory you are making a shirt, in a single factory you are making a handkerchief, in a single factory you are making a, say, a pen. Now the overheads incurred, say the rent will be common. Now you have to identify rent in the different products. You cannot use this direct material cost method. Why sir? Because the material being used for the shirt, pen and the handkerchief are going to be different, right? So this method is suitable where your output is uniform. That means only one type of the product is being produced. If you are producing the shirts, you are producing shirts only, right? Because in that case the direct material cost will be uniform. Direct material being used will be uniform, right? Then you can use it. Otherwise, if you are using the different direct materials, then it will be a different scenario, right? So this is the first method, that is the direct material percentage, that our overheads are what percentage of direct material cost. Percentage is calculated on the basis of the last year data, that whatever is my direct material cost, my overheads will be 50% of that in current year. To identify what overheads, what amount should I set aside, right? Why we are doing this? That's what I told you. Now from here you got to know that if in the current year my direct material cost is going to be 20,000, my overheads are going to be 10,000. You can keep this 10,000 aside, right? Clear? Now one question that comes to the mind is, sir, we don't know how much of the overheads will be incurred in the current year. This is just an estimation based on the last year, right? You are correct. In the current year, your overheads might be 10,000, your overheads might not be 10,000. Sir, what to do in that case? We'll discuss that, right? This 10,000 is what? This 10,000 is only an estimation. This 10,000 is only an estimation based on last year. Based on last year. But the things might change in the current year. Yes, the things might change in the current year. You are absolutely correct. Now, if the things change in the current year, what we have to do? We'll discuss that. Don't worry about it, right? We'll be discussing that in the later part. This much is clear. This is the first method, that is the percentage of the direct material cost. Always remember, for the absorption of overheads, you need some direct carrier to carry the cost, to carry the overheads from the production department, from production department to one unit of finished goods. So the first carrier is direct material cost. that what percentage of overheads will be carried to the 1 unit of finished good on the basis of direct material, right? Any doubts up till this point? Now let's come to the second method. Sir, what is the second method? Second method is percentage of direct labor cost. Percentage of direct labor cost. Right? This is going to be our second method. Now, how to calculate the overhead rate in this case? In this case, the overhead rate is calculated as budgeted overheads divided by budgeted direct labor cost multiplied by 100, right? So like we calculated the percentage of direct material, in this case, instead of material, we'll calculate the percentage from the direct labor, right? That whatever the labor cost was in the last year, in the same example, instead of material, I take the labor. That 50,000 is my budgeted overheads, 1 lakh is my budgeted labor cost, right? My overheads will be 50%, right? From this data, I can say my overheads are 50% of my direct labor cost. So in the current year, if my direct labor cost is 20,000, my overheads will be 10,000. So instead of material, we are using the labor as a direct carrier. Right? Instead of material, we are using the labor cost. See, this direct labor cost is already identified in 1 unit. Yes, sir. Right? There is no doubt in this that this labor cost, direct labor cost, is already identified. We have studied the chapter of labor costing. It is already identified in 1 unit, so it can be used as a direct carrier. Yes, isn't it? Any doubts? Okay. So when can we use this? Let's see the suitability. Let's see the suitability of it. That when can we use this labor cost, this percentage of direct labor cost method, right? One is when labor is a major factor of production. When labor is a major factor of production, right? Sir, what does this mean? Labor is a major factor of production. Now this, try to understand, whenever we are talking about the factors of production, whenever we talk about the factors of production, that means what are the various sources through which we can do the production, right? Majorly, there are 2 factors of production. One is labor, the other one is machine, right? That means whatever you are using the help of which factor, right? Either your factory is labor intensive or it is machine intensive. That means whatever the product that you are manufacturing, either it requires more of labor or it requires more of machinery. Less of labor, more of machinery, right? So these are the factors of production. Okay, so where the labor is a major factor of production and not the machinery. Second, direct labor cost is one of the major cost, Obviously, sir, if your factory is labor intensive, then your labor bill will be high. That means the payment that you are making to the labor in the form of wages or salary, it will be high. Yes, sir. That means your direct labor cost will constitute one of the major cost out of your total cost, right? Then C part, that labor rates do not fluctuate much. Labor rates do not fluctuate much, because in that case again our overhead absorption rate will be wrong. Then we will not be able to find the absorption rate based on one rate, because if your rates are fluctuating quite often, then we cannot use this. Clear, sir? This is the percentage of direct labor cost. This is the second method. Now coming to the third method. What's the third method, sir? Third method says percentage of prime cost. percentage of prime cost. Now what is a prime cost? What is a prime cost, sir? Sir, you haven't told us what is a prime cost. Simply saying, we'll discuss this prime cost again in the chapter of cost sheet. Prime cost, what is the meaning of prime? Prime means the most important cost without which you cannot do any manufacturing activity. Right, without which you cannot start your manufacturing activity. Remember when we started with these lectures of costing, I gave you one example that if you want to build a house or if you want to build your office, right, can you start building that house or building your office without material or labor? Without any direct material, direct labor, can you start the construction? No, sir. So prime cost is one of the most important costs, that is, which is primary to any activity, right? Which is the most important for any activity. So prime cost is simply the sum total. It is simply the sum total of all direct cost. Sum total of all direct cost. Direct cost. Right? So I can say that prime cost is equal to direct material cost plus direct labor cost plus direct expenses, if any. Clear? So this is the prime cost. Now how to calculate the overhead rate based on this? Now if you have to calculate the overhead rate based on prime cost, right, this direct material cost will be known in 1 unit of identifiable in 1 unit of finished good. This direct labor cost is identifiable in 1 unit of finished good. This direct expense is identifiable in 1 unit of finished good. So this prime cost is your direct carrier. Any doubt? This prime cost is your direct carrier, right? So how to calculate this overhead rate? Very simple, sir. Budgeted overheads divided by budgeted prime cost. Budgeted prime cost multiplied by 100. Right? So what is the prime cost? Prime cost is simply the sum total of all the direct cost. First we took only the material cost, then in the second part, in the second formula, second method, we discussed only the labor part. Now in the third method, we discussed combined both material cost, labor cost, and if there are any direct expenses. Right? So that becomes my prime cost. Clear? So prime cost and budgeted overheads on the basis of the last year, as we have already discussed the example, right? In that case, we have only taken the material cost. There you can take the prime cost. Simple. Okay, sir. What about the suitability? What about the suitability? Suitability is where material and labor both are the major cost in the cost of production, right? Where both material and labor, are the major costs in cost of production. Right? Clear, sir? So there is nothing very difficult or to be explained in it. Simple, in a very simplified language. So we have discussed the three methods. Let's come to the fourth one. Fourth is rate per unit of production. Rate per unit of production, right? Now this is not a percentage. I have not written, you need to be very careful where it is a method as a percentage or whether it is a method as a rate per unit or something like that, not a percentage, right? So how to calculate the overhead rate in this case? The overhead rate in this case will be budgeted overheads divided by budgeted number of units produced, right? Now that means we are absorbing the overheads on the basis of the number of units that we are producing. For example, say last year my overheads were say 1 lakh rupees. My overheads were say 1 lakh rupees, and my units produced is equal to 10,000 units, right? Now can you tell me what are the overheads that we can absorb in 1 unit? Can you calculate the overhead rate from here? You can calculate the overhead rate from here as 1 lakh divided by 10,000, that is rupees 10 per unit. That means for every unit that we are producing, we are incurring 10 rupees as overheads, right? This is the meaning. For every unit that we are producing, for every finished unit that we are producing, we are incurring 10 rupees as overheads. Any doubts? Right? Now, in the next year, what I assume is that my rate of production will be almost same. But in the current year, what happened is, in the current year, my units produced, I produced say 9,000 units, right? Now, if I am producing 9,000 units and I say that for every unit, I am incurring 10 rupees as overheads. For every unit, I am incurring 10 rupees as overheads. So for 9,000 units, what will be the value of overheads? For 9,000 units, it will be multiplied by 10. 90,000 rupees, isn't it? So this is the overheads absorbed in, these are the overheads absorbed in 9,000 units. This is the value of overheads that I will be taking. Clear? So this is based on the number of units that you are producing. It is not as a percentage of any cost. See, the number of units itself are a direct carrier, right? Because you know directly how many number of units you are producing. So it is a direct carrier, isn't it? Right, sir. So let's talk about the suitability now. Let's talk about the suitability of this method. Now, where only single product is produced, or similar range of products is being produced. Right? So you can use this method only if there is a single type of a product that is being produced, or a similar range of a product, right? It means if you are making a pen, whether you are making a single type of a pen, you are making a ball pen, that's fine, right? You can use this method. Or even if you are using a similar range of the product, you are using a ball pen, you are making a gel pen, right? Here and there the overheads might vary, but if you are making a pen and a shirt, then from there you cannot use this method, because the number of units produced, pen will be different, shirts will be different, the overheads incurred will be different. Then you cannot use this method, right? You cannot compare the marks of a class 7th student with a class 11th student, isn't it? Right? So that's simple. So this is the rate per unit of production. Any doubts? Now let's come to the fifth method. Fifth method is direct labor hour rate. Sir, we discussed this method already, sir. We discussed one method related to labor. Read it carefully. The second method, it was the percentage of the direct labor cost, right? And in this method, in the fifth method, I am saying direct labor hour method, right? So the difference is between the cost and the hour. There we were taking the percentage of the cost that we have incurred. Here I am saying the direct labor hour method, right? I am not saying the percentage. I am not saying the labor cost. What I am saying is the labor hours, right? That means my absorption of overheads will depend upon the number of hours that my labor is working, right? In the second method, I was talking about the labor cost, that my overhead absorption is dependent upon the direct labor cost that I am incurring. Here I am saying my overhead absorption is dependent upon the number of labor hours that my labor is working. Clear? So there is a difference between the two methods. So overhead rate, how can you calculate? Simply, sir, budgeted overheads, it will remain the same, divided by budgeted direct labor hours, right? Budgeted direct labor hours. For example, let's see. Say my last year my budgeted overheads are 1 lakh rupees, right? And my budgeted direct labor hours, that means my labor worked for 10,000 hours, right? So what will be my overhead rate? 1 lakh divided by 10,000, right? That is rupees 10 per hour. What is the meaning of this now? Rupees 10 per hour. What is the meaning of this? This means that for every hour which my labor is working, I am incurring rupees 10 as overheads, right? Simply you can say if my worker is working for 1 hour, I have to give him the 10 rupees, some eatable or some 10 rupees tea. Simple. That is overheads, canteen expenses, overheads, isn't it? So I'm saying if my worker is working for 1 hour, for every hour that he is working, I have to give him a rupees 10 cup of tea. That's it. Right? So in the current year, if my direct labor hours, if my labor works for 9,000 hours, right, then what will be the overheads? What will be the expense that I have to incur on tea? For 1 hour, 10 rupees. For 9,000 hours multiplied by 10, 90,000 rupees will be my expense on tea. Right? Tea, coffee, samosa, whatever it is. Sandwich, anything. Right? So this is based upon the direct labor hours. That means the number of hours for which the labor is working. Clear? So now what we have done is we have discussed 5 methods, right? The first was the percentage of the direct material cost. The second was the percentage of the direct labor cost. Third, percentage of prime cost. Fourth, rate per unit of production or per unit of output. In the books, all those who are having my books, it will be given as rate per unit of output, rate per unit of production. That is one and the same thing, right? Nothing to worry. Then you have the direct labor hour method. Now, the 6th method, that is the machine hour rate method. Okay, its suitability. Sir, its suitability is obviously where the labor is a dominant factor of production. This last 5th one, direct labor hour, where the more of labor is working than the machine. Again, the factors of production thing comes into the mind, right? Now, when we discuss about the 4th part, that is the machine hour rate, right? The 6th part, I'll just start with it, but I will discuss it in detail. Now, this is one of the most important parts. Machine hour rate. Machine hour rate. method. Now this is one of the most important methods because quite often you can expect a question on machine hour rate in the examination, right? This machine hour rate is in itself a separate topic, I can say. Within the topic, it is itself a separate subtopic, right? So how to calculate the overhead rate in this case? Simply, sir, budgeted overheads, the thing will remain the same. The budgeted overheads divided by budgeted machine hours, right? That means in the labor hour rate, we say that for how many hours my labor is working. Here I can say for how many hours my machine is working. Dependent on that, I can absorb my overheads, right? It is a cost. It is the cost of running. It is the cost of running a machine for 1 hour, right? That if my machine is working for 1 hour, what is the overheads that I am incurring? Overheads in the form of electricity, fuel, oil, right? Maintenance. All these things are what? Overheads, right? So what is the cost? What are the overheads that I have to incur if my machine is running for 1 hour? So talking about the suitability, suitability is where machine is the major factor of production, where major part of production is performed by machinery and not labor, is performed by machinery, right? Right, sir? Now, we'll end this lecture here only, right? I hope you are very much clear with the first 5 things. Now this machine are all the 6 things you are clear with, but what we have to discuss is now we will be carrying this, we'll spend approximately I think 2 to 3 lectures on this machine hour rate only, because this is a very important topic from the examination point of view. Very important topic. You can expect a question, 10 marks question you can expect from the machine hour rate. You can expect a 6 mark question, 8 mark question, 5 mark question, 10 mark question from the machine hour rate, right? So this is that important a question from the overheads point of view, right? So we'll be spending some time on this machine hour rate. We'll be doing the practical problems also on this machine hour rate. Nothing to worry about it, right, sir? So we are finishing this lecture here only, right? What you people have to do is just go through it, revise it properly. Just do one thing, whatever we are doing in the lectures, whenever you are watching this lecture, revise it the same day, revise it the next day also before listening to the next lecture, right? This is what you people have to do, right? So see you guys in the next lecture. Till then, stay safe, stay healthy. Thank you so much.